Hello everyone. Welcome to the PivotBoss Monthly Market Outlook for September 2023. Thank you very much for joining me here this afternoon. My name is Frank Ochoa, aka PivotBoss, also author of the book Secrets of a Pivot Boss. And here today we will be covering several futures contracts, some crypto, some stocks. All have some things that we can talk about here. Some of the stocks that we'll look at are key range focused, which means we have great impulse moves to work with that give us some areas of intrigue in terms of entries and also targets down the road. And we have some good charts to keep an eye on here as we head into September and into later on as we enter into Q4. Now, if you have any thing that you'd like me to look at, please make sure to put it in the chat here anytime. The earlier the better, and we'll get to it as we go along through the meeting here. But for the most part, feel free to ask questions, ask about any particular charts, and we'll take a look as we go along. I do want to bring your attention again to the pivotboss.com/events. That link right there gives you our current events here coming up over the next couple of weeks, starting today. So starting today, we came in here and already began day one of our boot camp schedule here. Today, focusing on the MGR signal. The MGR signal a little bit earlier in the room today. That is our day one topic. Day two here will be the wick reversal, rather extreme reversal, then wick, and then outside here as we go through some of our proprietary signals that we'll be using in the room throughout the fall. And so this again is free and available to all members of our premium trading room. And if you are not a member, then for a very limited time right now, we are offering one free month to jump into our trading room here. Just be sure to use this coupon code. It is case sensitive. When you get started here, there'll be a spot that says use promotional code, and you can drop that in. So please be sure to do that. If you're not a member, it is worth your time to be a member here for the next month. And hopefully during that month here, we can get you up and running with our approach here and some of the tools we use to help find opportunities in all time frames in the market. So this is a great opportunity right here. There is also a lot that comes with it, including on-demand training, and that again you can watch some great video content there until you are happy, because it is a ton of content that is available at your fingertips. And again, we continue to produce daily content here at Pivot Boss. Now, if you scroll down a bit more here, this is our webinar for today, the monthly outlook. We're going to look at some of the longer term charts here and some swing ideas. But one last piece here is scrolling down to the bottom here. This is Masters. Masters is next week. We had a very, very successful Masters round of live sessions here at the beginning of August. And it was so good we decided to do it again here to begin September. It was the thrust reversal signal that we released last time around, a very, very powerful signal that has found its way into the top of our rotation here. We're going to come back with it to start out, and then we're going to introduce a new round here of squat paint bars, and this is going to be basically our blue squat along with the green squat as well. That allows you to post it in a paint bar fashion so that it helps to enhance what we're looking for. Now, again, we'll be looking to engage the market using these tools here throughout the week. And so again, you can look at the schedule here, varying times throughout the week next week. But those are free sessions for our Masters members. Again, if you are not a member, click this link and you can get started with joining the group. So this is what's up ahead here over the next couple of weeks. Again, thank you for joining me here today for our September monthly market outlook. We're going to go ahead and get started with the top of our list here, which is the S&P 500, the ES. This one right here, we're just going to look at it from kind of a higher time frame perspective from real briefly here. Weekly chart on down, again, coming into the last portion of the year. So if you look up here over the last 3 years, we had a year up all the way, then a year down all the way, and now this year we've seen this thing come back to the midpoint. It's taken out the midpoint, and now it's working its way up higher, perhaps toward the previous year's extreme. Now, it never reached the previous year's low. It fell shy here, and then it rallied here, and now it's finished here. So maybe we don't reach the high. Maybe these highs are in for right now, and we now have to retrade back through this portion of the profile. Remember, we've only traded it back here at the beginning of last year, and now we've made one pass through it and a midway pass back through it. Do we need to come in here and trade back in here a little bit? Or is it more likely that we continue this thing and extend for that previous year's high? So there is some potential spots in the volume profile that could be retraded through some of this thin part of the profile. We've traded up here. We'll see how that plays out here, which means after all of this strong movement here that we've seen over the last few months, do we go mostly range bound, wide-ranging range bound move into the close of the year? Or again, do we see a bit more directional conviction? Again, we're going to continue to watch this from a higher time frame standpoint, but the big levels that we've talked about, and for those of you that have been with me for a while, I talk a lot about market structure. And, again, each of these markets tend to develop their own market structure that really clearly reveal the support and resistance levels that are at play, and how the market trades off of those levels can be impressive to watch when you find the underlying levels. 4,200 is one of those key market structure levels. You can see how it was support before. It transitioned here, resistance, trap, resistance, 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 and then transitioned back above. So 4,200, a big level. The level below it's 38, and that right there is a 400-point distribution from high to low. If you look up here, the next 400-point distribution is 46. So again, the top of this previous range. So if you recall, back in May and early June, all of this time in here, we mentioned that if we get a break through 42, we may be done with this lower distribution for now, and we may be looking at a move to 4,600. So we knew this back here in May before the breakout, that we could see that push of 400 points up. The market did indeed make that push. We're now a high of 46.34.5. You can see 4,600 here, and ever since we've impulse move down and kind of have this little range at these highs. So if you had to look at it here, again, this is the range. It's 4,200 to 46. Until we're ready to transition out of that range, we're still stuck in the range, which means if we come up here, it could be a bat back down. If we drop down here, it could be a push back up. So again, keep an eye on those major market structure levels right now. But really, in terms of overall strength, this market has continued to maintain some bullish uptrending price action behavior right there. Good break to the upside. Can we form some higher lows that can open up a retest back toward highs? Again, we'll see. Again, this market right now continues to develop here a bit within the range. And one of the hardest parts to engage a market is when it's right at the center, right between two extremes. It's right at the middle. If you consider a range a D shape or a D shape in development, then you want to be out here when you're engaging a market. So you got to be up here looking to fade it, or down here looking to fade it. And right now we're kind of at the center, with an upward bias in the medium term, downward bias in the short. All right, let's take a look here at the NQ, because it pays, especially when Vito's engaging here. This one's been very strong. You see here the uptrend right here has been intact for a good long while. This market's been very, very strong. Again, May was just a a significant month where we had multiple weeks of sideways and then just an explosive move to the upside. AI boom and other things here. Nvidia leading higher, Meta, a lot of these stocks that just rallied. Ever since we hit that day right there, that was a really, really strong high. This is a weekly chart again, but that was a pretty solid high in terms of the entire week. The squat reversal, the midpoint became a bouncing off point later on. Right now, downtrending, and it reminds me, of this here, right? That's kind of where we are. And today, on the first trading day of the week, we get a perfect doji, and it's kind of like this here in development. Is it going to trigger another wave of strength ahead? That's going to be the big thing to watch here for the NQ. It's been quite strong. Does the next pullback allow for an opportunity for buyers to defend and rotate this thing up to a new high above these highs here? 16.4 could be ahead. There's somewhere in that zone. So that's going to be something to watch up ahead. The structure's still clearly in play. When you look at the 8-period average and the bullish Pima trigger zone here, again, still honoring that Pima trigger zone since the crossover, retest, bounce out of the zone here. This one came deep and bounced back out again. So that market right here continues to show quite a bit of strength. Now, overall, what I've mentioned to begin the year was if we can reject this level here, we can snap back to the midpoint. That would be a Q1 play. A Q1 play we mentioned. Or was it a Q2 play? First half of the year. Either way, it was something that played out very quickly. But then here's the breakout through the midpoint, and that opens up the high. So are we going to stretch and grab that high? 16,573 would be that high from last year, and then you have the previous high just beyond it. So you got these two highs, this little piece right here. Can we go find this zone up here, 16.5 to 16.8, somewhere in that zone? And perhaps so. I mean, again, this market has been able to shake off weakness. Even on that strong low right here, some of this, ever since this strong low, these multiple weeks of weakness has led to new highs every time almost. And right now could be the next one that plays out. So this market remains strong, hard to fade into this strength. But if we make it up here, that might provide another fade right back down. And it'll be very interesting to see if we start to build out a 4-year trading range, where next year we come right back down. That could be in play. So we'll be keeping an eye on the edge here for the NQ. Now, RTY, compression, tremendous compression. You can see here a little bit of rounded characteristics as well. I guess not a little bit, quite a bit. Quite a bit of rounded characteristics there. We have kind of the rounded bottom, saucer bottom there. If only we can push through this 2032 level, 2050. If only we could get through that zone. And so far, every time we've gotten close, it's been smacked down in big time fashion. Like this thing led up to begin the year and led right back down. This one also heavy drop today, heavy drop over time. And what those drops are doing is it's really leaving behind significant pivot highs, significant inflection points in the chart that down the road opens up the upside once it's ready. Maybe it's next year, and that could very much be in play. If you look at the current year's range, this is it. That's the range. 1703 to 2017. That is nothing. I mean, that's 200, not even 220 points. 225 points. So, I mean, it's very tiny. It's inside the previous year's range, the narrow pivot range for the year. Maybe we finish the year again in range, and then next year could be the breakout year ahead. Or at the very least, an outside year. an outside year, which means if we close the year here, we come up here, here, down, outside year down, followed by buy here, and then bring it back up here, outside year up. You know, that right there is next year's playbook. Uh, if we close the year in here, that's the playbook next year. So again, we still have a few more months to go, but this market has been very much range bound. Now, here's something that's going to be fun for tomorrow. How do we play out tomorrow? Tomorrow we do have pre-market economic data points, including exports, imports, and trade balances. We have S&P Global Services PMI 15 minutes after the RTH open. And then we have ISM non-manufacturing PMI that comes out 30 minutes after the RTH open. And then Beige Book at 1 p.m. Central. So tomorrow could have quite a bit of volatility throughout the day at different parts of the day, which could lead to a decent sized day if it really wanted to. It may go quiet into Beige Book and then provide a last round of volatility. When you have a high range day down like this, that's that big, there can tend to be a fade after trend day. And so are we going to see a fade back up tomorrow? Are we going to see a fade back up tomorrow? You can see right here, this is a 147% of average range and huge high range day down. Now overall, if we were to fade back up, the high range or the high percentage target would be the midpoint. The midpoint is 1903 half. 1903 half is the midpoint. You want to know what else is 1903 half? It's the previous month's close price. This level right there, that black dot, is basically right there, and underneath that black dot is the midpoint dot of the day. They're both 1903 half, and that's the level, which means tomorrow, watch the previous session's low and close, and if we reject prices below it and recover back above that low, you may be able to see a bounce back that could take you back toward the midpoint in the best case scenario for a fade after trend day. And in essence, that type of move right there would be about a 20-point move, maybe a little bit more, and that would be a fairly doable size move here. Given, let's see, if we were 1880 and then it rejects here, today's close is right at 83, so you're rejecting 83 back up to 03. That's exactly 20. If you look down here, an average size range right now is 30.5 points. It's been averaging 30 points per day, not just over a 2-week basis, but a 1-week basis as well. So 20 points should be very easy, right? So now, is it going to be 20 down or is it going to be 20 up? Which way is it going to be? And it's usually a case of order of operations. If we drop down first and find a strong low first, then we fade up right away and start to work higher. But if tomorrow, and we'll see what overnight trading brings, we start to drift higher early on, that drift higher will be met with selling pressure by bears looking for an inverted checkmark day down, in which case 20 points down could be in play instead. 20 to 30 points down. So this is going to be an interesting one to see how it develops. There could be both, where you fade up first, and then once the fade happens, it drops back down. You know, things like that can happen, right? You can see it here. Big day down here. You see a fade back up. It hits the mid, like we said, and then it drops right back down. You know, we'll see which way we come this time around, but this is going to be an interesting one to watch. Now for bears, I would say bears want to defend this black dot and the midpoint at all costs at 1900 to 1905 for a shot at this target right here. That's 1833, 1830 or so, right in that area. That's the lower part of that range. That's going to be a big time one to watch here for RTY, especially after recent weakness. That's a big time level right there. Let's take a look at the YM. The YM has traded really, really well off of some key levels. It's done really well off of key range levels and market structure. Again, I sound like a broken record sometimes when I say these things over and over, but I know new folks come in to our audience and it's new levels to them, and also helps reinforce for the rest of us. But 35,800 on the 800s, we have very important key range, or rather market structure levels. This one right here is 34,800. That one right there is 33,800. You look a little lower right here, that's 32,800. You look a little lower, 31,800. These are your levels. Great levels here, back and forth, and you can see how this market treats these levels at times, pushes through, finds the next one, back to the next one. It's incredible how that plays out. The one that we're seeing right now is 34,800. That's in play. And initially on this drop especially, and after this breakdown, I mentioned any test into that zone should be sold likely for a return to 33.8. Instead, this thing powered through that day. There was never a rejection. It just powered through. And then the rejection came on this day. So since that day now, you have a strong low and a strong high and a developing key range. If it hits 619 tomorrow, we have ourselves a new key range, and we can use this key range here now for some good action. The most recent key range, by the way, and by the way, if we fail here, you go down to 33.8. 33.8 bouncing here. If you fail at 33.8, 32.8 would be the next level down. Incredible when it jumps off the chart that way at you. Now here's a key range that we had recently. So there to here, impulse high, sells off, impulse low, midpoint retest very quickly, and that sets the edges and it sets the framework for trade. You have the high, you have the low. Impulse high until it can't go anymore, drops until it can't drop anymore, bounces back and hits the midpoint of that impulse move rather expediently. As I usually say, below the key range low, from here to there to here, and as low as that 25% expansion level, that's your best entry point on the board. And then you have targets up the way. You have a target here at the midpoint, you have a target here at the key range high. That's going to be your best bet most of the time. If you can get a trap here and return it up, man, you're cooking with gas here. It's looking good. Now, if you push through the top, you're expecting a continuation to the 100% extension at the very top here. So this is the 50% extension, that's the 100. And look how the YM got there. Perfect. And sometimes you can think that, hey, if this market's bullish, I want to trap here and I want to hold on until it goes here. And you can foresee that sometimes, and sometimes you can ride that entire move. And I will say that during this key range development, we talked about that at the time. So on this day right there, when we hit the midpoint, and we have the recording to go back, we marked the key range on that day, and we talked about the best entry would be this level right here, which is 32,600. And then that level could take us to 35,723. On this day right there, we mentioned that entry and that target based off the key range and the best case scenario. Now, to see it happen in the best case scenario is crazy. I mean, it just played out almost perfectly and did so very quickly. I don't want to say that's rare because it's not, but at the same time, to see it develop in a bullish manner the way it did today was pretty solid. It was really great, especially given how sideways a lot of action had been lately. So that's a key range right there, and that's probably, if you want to mark a key range that is a textbook key range, that's one right there for the books. That's it. It's solid. This could be another one right here. So impulse low, impulse high. Here's your midpoint. It's 34,619. If we can get that level, we cement this key range, and now we have some targets that could be in play. If we drop all the way and become weak, we could get as low as 32,947. That's this target here and back near these lows. And it would take us back to this key range low here as well, 33.05. That's this level right there, the initial rejection point. So this key range right now gives us enough energy to get precisely there. So you like when things line up that way. And so already we know 32,947 could be in play in a bearish scenario. In a bearish scenario. So if this works out in a bearish scenario, that could be a solid target down the road. From a bullish standpoint, the upside target is right here. It's 36,292. Just call it 36.3. 36.3 right there. Here's your high. Here's your low. So, right there. That's your entry zone. If price drops down here and we do this again, right in this area, it would also coincide with 33,800. It would coincide with year-to-date VWAP, the 200-day moving average, VPOC. There's a ton there. But a drop into that zone could offer an opportunity to go across the range to 35.1. And in the best case scenario, 36.3. You're looking at 33.8 to 36.3. What is that, about 2,500 points? Could be the next move here for the YM in a bullish scenario. The reason I think it could be bullish is obviously look at the trend of the market here. I mean, that's what it has been doing. It hasn't been the most glorious trend, but it has been trending. The lows are higher and the highs are higher and the trend is higher, and you could draw perhaps a regression channel that would look something like this. So to come down here, below here, and trap, I mean, it could provide a tremendous opportunity back up the way. Obviously, these lines would adjust. But you go from trading down here to trading up into here. And that would be right in line with what we're talking about. So this key range, again, could be in play and cemented tomorrow. And if so, we have ourselves a good framework to work with. So good stuff right there out of this one. And the reason I'm explaining some of these key range concepts a little bit more today is because that's what we're focusing on in this monthly outlook. We're focusing a little bit more on the key range concepts, and some of the stocks that we're going to be showing off here today have newly formed key ranges and things of that nature. So looking at this again, 619 will be that target that we're looking for, and we likely get that perhaps tomorrow morning and can go ahead and lock that in. The next one I want to talk about here is crude oil. Right here. Oh, yeah, usually when I'm entering a trade, it's usually in the morning. In the morning, and then oftentimes in the afternoon, if I want to be in before the close for some swing entry or some earnings play, then it'll be in the last hour of the day, usually in the last 30 minutes of the session. But for the most part, it's in the morning, looking for execution on any of these ideas. Sometimes it's a day idea, and sometimes it's an idea that I may want to take from a swing perspective. So it all depends. For example, the Friday idea was a 0 days to expiration idea where we were selling the call down below in the QQQ for a shot at dropping back below it. And all the markets had a similar setup on Friday. So that was a 0 day to expiration. That's a morning idea, you know, and looking to take it off as the premium melts away. Usually in the morning on that. Now looking at, yeah, thank you, Lou. You know, I'm glad you noticed that, because we were quite bearish. I was quite bearish on crude oil. From this move here, that was obviously a strong rejection, and we were looking for this thing to get a short-term rotation. But then right here on that day, I was like, no, this thing has had nothing but lower highs. It just can't get going. It hasn't been able to put together an up move. And the next day proved me wrong and closed beyond the mid. And that was the first aha moment. Okay, maybe this is different, and maybe we can get to the top of the range and value, right? And it did. It was like, oh, now it's starting to earn it. And it earned it for a long way, and now we knew, okay, we may be headed to that 83.52 after all. And we finally got to the 83.52. Now, again, when you look at this chart, we've been talking about market structure as well, and how some of these markets have great market structure. The one here is 74, and then you have 84, and then you have 64. That's basically on the 10s on the 4s, every 10 on the 4s for the current market. And then if you go up one more, it's 94 right here. And so you can see there's your 94 rejection. It falls through. 84 makes it resistance and goes down here to 74. It fails at 74, drops to 64. Fails at 74, drops to 64. Goes above 74, goes to 84. So right here was a change of bias point for us. If it can push through 74 and then hold it on a retest, we might actually go get 84. And it did. And the way it did it was so dang strong. And again, it's what led this higher is part of what's leading it higher still. It's the Saudis, I believe, cutting 1 million barrels per day and extending that cut outward every time. It extended it here, and I believe that's when that day happened. And it continues to see this thing push higher. So that's a little bit of the story there. Now, really quickly on this right side, so bullish, 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 bullish until you hit an edge. And then once you hit the edge, then you start turning bearish, especially if the edge is met with a proper rejection. And that's why we were so bearish here. This entire time, everything was looking at it from a bear side standpoint. And if we can break through 79, I mentioned, it opens up a move back towards 74. And on that day, I thought it was finally doing it. It was down here at the very end. I mean, even late in the day, I believe, it was still down there. And then at the very end, it popped. And then the next day was a double bottom, which is a perfect tweezer bottom almost. Almost a perfect tweezer bottom. It was a failed new low. So you had the low of 62. The next day was a low of 59. 3 pennies. And that was all she wrote. That pushed it up. When this bar formed right here, I mentioned this is exactly what you would normally look for in a downtrend, but I think tomorrow it's going to finish through the mid. So that's what we talked about here. I know this looks like a bearish signal and it's trending down and maybe it's a lower high, but I think the next day is going to finish through there, and if it does, we might be taking out these highs. And it all happened when this day failed to really materialize to the downside. It all happened when this day was able to squeeze back above 79s, and then this failed new low got the party started. So impressive movement, but it's to lose point. Your bullish bias on CL was impressive. He's mentioning here, but it was after I had been extremely bearish until it was proving us no longer to be right. It was me no longer being proven right, being like, okay, well, this thing is shaking it off and turning around. And now it's, this could be the last trap before it tries for new highs. So being able to adjust there was very helpful. Now, to your question here, did this wick scare us off? Because you bounced off 74, you transitioned and bounced off 74. Did this wick scare us off? That's a good question. And we can go back to the tape that day to see exactly what we were saying that day. But in an uptrend, and when you have this 8-period average rising the way it is, sometimes instead of seeing this as a sell signal, I'll see it as noise within a range, within an uptrend. So right here we have a sell signal, but it's within range, And when you have a signal within range, especially if it's in an uptrend, it can be a trap. Just kind of like I saw that could be a trap, and that could lead to, again, a squeeze ahead. So I don't believe I can understand where you maybe not scare you off, but maybe keep you just just keeping eye on the situation. Just keep an eye on this, because really the change of bias happens at here at 74. So on the bounce, you got your midpoint here, but it's got to fail at the lows. Otherwise, it could still work its way up. And when you do get a signal like this, I love to see a failed new low first and then try to melt through that thing up. And that's what we talked about here the day before it happened. It's the same exact thing. It's almost a similar deal. This is designed to suck in some last sellers, and then when those sellers become trapped on the failed new low, their short covering is the fuel to lead the squeeze back up. Oh, is that a positive test there? That's I suppose yeah, that's how it started for my eldest daughter here. Is she woke up with a scratchy throat, and we said, "Uh-oh, that's weird." But it never really got bad. It was just her sitting in her room getting fed all day by her servants, me, feeding her great food the whole time, and she just thought it was a vacation. Okay, so hopefully speedy recovery, and hopefully everything's okay, obviously. Um, but yeah, it's making the rounds right now for sure. Okay, taking a look at crude oil right now. Okay, this is a little history, but now where are we going now? What have you done for us lately here on this chart? And today's bar is very tricky. It's a tricky bar. It has some strong high qualities, very, very strong high qualities. The day's low is also a pretty good pivot low, and you have it kind of sets the range up here. And remember, 85 big time level. We talked about that level pre-market video. 84 is the edge. We have all these key levels right here. It's sitting up here in no man's land for the first time in a very long time, since last November. November of 2022 was the last time it was at these highs. So we've not traded here since last early November. Man, so I would say this day right here, and that was November 16th. So, yeah, this is a long time coming here. Now, this is going to be a level here where if we fail here, these participants could become trapped, and you rotate back down the range, and you're still inside this range. And that is what tends to happen more often than not. And it's one of my favorite trades that can tend to happen. Having said that, there's so much bullish headline risk here that it's hard to fade ahead of headline risk like that. So selling crude oil right now is not the way to go. It's unsellable. It's unfadeable at the moment. So please don't try to fade it. It's just very, very strong. But this is a spot where a trap could occur, and if it does begin to develop, that's when perhaps you can fade it back into the level. But it has to be a confirmed rejection of that pivot high and an inability to rise back above that pivot high so that it drops. So 85 is going to be the key level, big time level here. Oftentimes when you have a high range indecision bar like this, a high range indecision bar, today's range 167% of average. 167% of average. So it's a big day. But it's a big range-bound indecisive day, and it closed right precisely at the day's midpoint. So that is, to me, an indication of range-bound action the rest of the week, perhaps. And then we might make a move out of this range sometime next week. So this could be a narrow range play up ahead. Selling on both sides of the range here and hoping that the thing stays close as possible to 86s throughout the week. So again, range bound, Got to keep an eye on 85. It's tricky to sell it with so much upward conviction, but I would say if 84 is our continued level, market structure level to watch, then that's the level. You know, it comes back and bounces, then 94 is the next level up. So are we going to 94 before we go to 74? Right now, 84 is the key level that it pushed through. That's the level to watch here. So do we come back down here at some point, or are we finally going to stretch it? So much headline risk, positive headline risk for this one, that this might be the time it can stretch for 94s. It's just tough when you have the headline risk like this that just continues to push it unidirectionally. Let's talk some Bitcoin. Bitcoin right here, showing some big time rounded top qualities here, especially in the higher time frame. Let's get the trading dog out of the trading room. So right here you have this large rounded top right here, big time rounded top. You have this 25K level right there, which is a big time level. The next level down about 20K, and the next level down 15K. And those are your levels, every fives. Every fives. Right here was 30,000. And then it tried to hold above 30,000 and failed and went back to 25 basically. Not quite there, but there. Those are your market structure levels. Big time rounded top. Now, for those of you that followed us back since last December, we mentioned that this was setting up the perfect trade for a squeeze. Once it gets through 18K, it has a shot to hit that pink line by the middle of the year. And it did it by the middle of the year. That pink line, 31.7. And it was this box reversal down here below the 18K market structure. And initially we said if it can get through 18K, it can get to 25. And if it can push to 25, that's already quite a move away from the yearly close and low that now you're working toward the yearly midpoint. So that pink line is the previous year's midpoint. So when I begin a new year, you know, you're looking for the low close, and if we close a big time year at the lows, I'm looking for a rejection here to snap us back to the middle of the range. That's usually what I'm looking for. And then if you can push through the middle, then now you're looking for a move to the top. But this was already a big distance, and this was already going to be like 80% gain just to get there, and it did it. But that's all it's done, and now it's rounded. And now we're having some issues. Now do we go retest the lows? This is going to be very interesting. So let's look at this in a higher time frame weekly chart. Oh yeah, absolutely. Absolutely, Lou. Those are what I would call active investments or long-term trades, where what I like to do is, and I missed a couple here recently. It's my bad. We'll get back to Bitcoin here in a second, but this is a related one, which is Coinbase. Coinbase. And this is one where at the beginning of the year as well, said, well, if Bitcoin is going to rally and go 18K through 18K up to 31.7, then it's going to take some of those crypto-related stocks along with it. And you know, this right here, 35K, we mentioned if it, or $35, we mentioned at the time, if it can reject here, we have a shot to get back toward 90. You know, and it nearly got there. But that already was a double. 35 to 70 was a double. But this is where I messed up here, is this right here. It was that key range, and the idea was to reject the low here and return it to the upper level. And I mentioned at the time 50 gives you 100, especially if the upper target is 120. The 100% target up here is 120. So I said, man, you don't even need 120. 50 is the idea here. So that's where oftentimes I like a good opportunity like this where you have a good foundational key range behind it that you can work off of, but then the multiple is big too. So going from 50 to 85, for example, is a big percentage gain. And then if you get to the 100, it's a even more than that. Obviously, it's greater than 100%. So when you do that, this is one where I like to be patient at times and kind of be in. Now, sometimes on these, I'll have more confidence than others. So sometimes I won't enter a full position right away. I'll enter, say, half a position at that edge, and then if price were to fall lower, if I really like the idea, then I can add back and average in for a continuation. For example, if you're in half here and it goes up here and it's kind of meandering, and then you're like, oh, it's giving us a retry, I'll add back here, for example. Just having flexibility there. The other thing is, if you are in and you are looking for a long-term double, for example, then the goal is typically she's trying to get my attention. The goal here is to try and get to a 100% target, so you have to kind of hold the full trade and then sell half once it reaches that far target, and that's how you get yourself into a free trade. Now, obviously, you don't always need to play the free trade, so but the goal would normally be, if you're looking at an edge play here and you're trying for the 100% target, then I'll usually try to, maybe take a little off here and then hold to the edge and then hold to, the farthest edge. So in 3 parts. So a 211 I'll do in 2 parts, but I can also, there's multiple ways that you can structure that depending on how you want to engage it. Sometimes we have a better, for example, a better feeling that, man, this is going to be a great opportunity. Other times, you may not. But if you do, then obviously you can do a reverse scale. Instead of doing a 211, you're going, a 112, where you're getting out smaller at the outset and allowing, the bigger payday to come toward the back end of the trade. And on those trades where you do have a bigger move, that's a way that you're going to actually profit from it much more than scaling out heavy at the front end. So when you do, or when you are looking to hang on for bigger gains, then you want to hang on for bigger gains with more of your position instead of scaling out heavier earlier. So good stuff there, and we can talk more about that as well as we experience some of these here in the room live. Now, going back to Bitcoin here, when you're looking here at the weekly time frame, this is something that we're going to have to really keep an eye on. It's the previous market structure here is basically 30K, right? That's right here. We talked about the every 5s. So there's a 5, here's a 5. I guess I can squeeze it out that way. Another 5 down would be here. So every 5, but that's like the small stuff. That's the small stuff that we can engage now. But from a longer term perspective, it's the 30K level is the big level, again, right here. And we're currently developing this rounded top here right at it. It's not able to push back above these lows. And if it can push back above these lows, it opens up the move back up the range, back up the midpoint at the very least, and maybe we trade, in here for a little while. But if it's going to reject this edge like this, then the next move down could be a new low. We could be going down there and grabbing the previous year's low, and then from there, it could be maybe a lower low failure that brings us back up to 32, and we try again later. But this rounded top is going to be very, very interesting up ahead. If you look at last week's action, it was a strong, strong rejection. Price popped up one day, extreme reversal the next, dropped the next. And here we are with a huge failed new high in a downtrend with a rounded top after expanding downward. I mean, all of this suggests more weakness ahead. If this thing pushes through the 25K level, 20K is the next level below. So that could be the next 5,000 down is that level. So just keeping a higher time frame look on this one, as things could get precarious here if it starts to push through 25K. All right. ETH, won't spend as much on time on this one here right now. It doesn't have the greatest action lately. It does have a good trading range. It is holding value, which is good, like maintaining value. You can see value is here. We have some multiple peaks along the way, so it's traded along at different points. Ultimately, you know, the 2,000 level to 1,000, it's a 100% range here, and a 50% range on this side, which means from the low of 1,000 you can double it to 2, and then you can lose half if you buy it at 2 and it goes back to 1,000. It's incredible how that happens. So whoever bought the breakout here at 2 or above, once it gets down here to 1,000, those folks will have lost half. And then once they lose half, they're going to be scared and they're going to sell it. And then the folks down here will buy it cheap, and then they will make 100% return on it here. And it just goes back and forth until we're ready for expansion. And this one's a good one here because it does have good levels. Again, 2,000 here, 1,000 here, and if you look up, 3,000 is here. If you look up a little higher, that's 4,000. Those are the every thousands. But even, you know, you have some great market structure all in here that can be in play. Still a good key range back here as well. And that's probably the best thing to work off of, will be this key range from a long-term perspective. So if you look at this range here, you have this high, the midpoint is there, and the low is this line right there. So this reaction came at the key range low. This reaction came there, this reaction came off of there, and this transition happened there. This level right there was such a strong reaction, and price dropped, that down the way, could be months from now, it could be next year, whenever we do break through this level, it's going to be through that pivot, and that will open up 3,000 up ahead, that 3,000 level right there. So big time pivot here, just not doing it right now through that level. You can see the key range low, and from the key range low, once you're able to push through that level, you tend to go to the key range midpoint. That key range midpoint is here. That's 32.63.9. That's that level right there. So that's the potential down the road. If you're looking outward and say, okay, well, if we rejected here and we rejected the retest, then we must be going back to the bottom, right? Yes, we must be going back to the bottom or getting close to it. And if we do, or have some kind of really hard drop, you know, usually these things happen in one fell swoop. This was 3 days. Boom. You know, if it wanted to, it can be there tomorrow. Look right here. This is where it was before. It was there the next day. So if it wants to, it can get there fast. But down here would be another buy opportunity back to 2,000. And if we think it's going to go up here and rally up to the middle of that key range, maybe that's the ultimate target. You're buying it at or below here for a return back up this way into that key range high. So some things that we can work off here from a longer term perspective, but this one's right now range bound, sitting kind of near the middle of the range. If this is 2,000 to 1,000 and 1,500-ish is kind of a zone here to keep an eye on. 14's been important, but kind of working lower at the moment. So we'll keep an eye on this one. Let's get to a few charts here. Okay, this is Charter Communications. We had Charter as a long here recently. It had this big move up, but now it's had this big reaction here and is now back to challenging 410 at the moment. So new information coming in, but big time compression here, big expansion, big move up. Looking at this on the daily time frame, we have ourselves a new key range, and this key range could be very useful here. This is something that you tend to see at times, and we're going to see many times in this chart, which is, you know, this thing got a big breakout here and multiple waves of strength, multiple waves of strength. Well, once you're done going up, you tend to see a blow off top of some sort like this that sets that ultimate high, and then price will turn around, sell off until it finds a strong low, and then it'll come back and bounce and give you a mid, and now you have a key range. And that key range is there to define the edges for facilitation of trade, and you can see this thing build out here, and then at some point it may see expansion one way or another. So that's the key range. We got this move up, then back to the mid. If you want, you can go this move down, and maybe it comes back to the mid. There's multiple here, but that's one key range right here. And just from a very short-term perspective, again, for tomorrow's market, we are currently below the key range low of 411.36. This is a key level for us, 410, and we close 408.99s. So what if tomorrow we open with a gap up? Anyone that was late seller will start to be forced to cover, right? You got to buy to cover, and now that leads to more strength, and you start to push through this midpoint, and that leads to further strength, and you see a fade after trend day. That could be in play. Now, anytime you close on lows like that, I'm looking for some sort of reaction and a fade back up the next day to that middle target at the very least. Sometimes you may drop first and reject prices below the low and recover back above that low. That low right there will give us something to work off as we push back up the range. So we'll be watching to see if we get a fade back up. One of the things I like to do is, if we do see the rejection here, say price drops and we're seeing a rejection and price is defending 408, 409 rather from above, then you can look to target a strike up above. For example, the 415 put, sell the 415 put, and as price pushes toward that level the rest of the day, you take it from in the money back to at the money, and that right there is money on an intraday basis. But then if you close through it over the next several days, depending on your expiration, you can grab the whole premium on that. So many ways to engage that one, but it's basically this trade idea here. You had a big high range day up, and now we're basically watching the edge, watching the high close for rejection, and if we reject, we fade back to the mid. Classic fade after trend day, extreme reversal play. So tomorrow, as soon as price ticks above the open price and is above this close here, you're going to start to see a buy signal, extreme reversal, and that could be played back up. So that's going to be something to keep an eye on in the case of early strength tomorrow. That's CHTR. And of course, you have now this large key range as well. So what if tomorrow we drop, say we hit this low, which is the previous month's low, and then we rally, and by the end of the day we close at 41.12. We close 41.12, which is right above the 411.36. If this happens tomorrow and we get a little signal here, nice little rejection, and it's happening off the key range low, then this target is the next one. That's 431. That's 20 points. That's very tradable. You know, 431 could be an easy target up above to go snap back to this midpoint. Again, that edge, this key range, is why it's there. Fade the edges as it trades within the range. This one could be a really good one from multiple standpoints tomorrow. Another one here is CVNA. CVNA has a narrow range at these highs. Trading range bound. Also a great key range as well. I'm going to mark a 3-day narrow for this one right now. And this is the range at hand, the key range here. Again, as we noted in the last example, when you have a bullish trending market, trend, eventually you blow off. This one blew off on earnings, and then you get a strong pivot high and you sell off till you find that low, and then you snap back to the midpoint, and that sets the edges. And now you can facilitate trade and be in here for a while and work off of that. Last week, or was it the week before, we talked about this narrow range at the key range low. And if it were to break to the upside, we could have a return back to this level. It's right there and sitting above it. Now we have this 3-day narrow range sitting off resistance. And if we fail at the midpoint, then you drop back to the level, 39.7. Maybe you go to 37 and the lows here. So a failure here, especially if the 49 level starts to open up a return back within the range. Short-term potential rotation back down. On a 3-day narrow range basis, we're at 68% of average. So not significantly compressed. We've had a ton of compression already, but enough, right? 60-something. We could see somewhere between, say, 6 and 8 points of range up ahead. If we fail at 48 and we drop 8 points, that's 40 pretty easy. So yeah, we could have a little bit of juice there if this thing can't hold the edge there. Meta's one that we'll watch here up ahead. This one closed strong today, but stayed within range. 4-day narrow range for this one. We looked at this one in our room this morning and mentioned that this one has about a good 20 points of range in the 4-day range here. So 20 points of energy building up here on a 4-day range basis. If we close tomorrow 5 days, then we'll adjust there. But just quantifying what's there for now in a 4-day narrow range here, 39% of average. That is very small. That's tiny. 8.3 points. Usually it's trading around 19 points of range on a 4-day range basis, at least lately, because the volatility has been so kicked up. Now, if we are to see an expanded move, a breakout move, it can go as many as 24 points here. So, you know, maybe we get 24, maybe not. Volatility has been super high lately, but is it going to hold that high level of volatility? And if not, then maybe it's somewhere between 20 and 24 points. Can it get somewhere in that zone? If we fail here at 295 and drop 20 points, that takes us to 275, which is basically the lower edge. And that's going to be the trade to watch. You know, that's going to be the trade to watch. If we fail here, we drop back to this point. Now the bullish idea would be for something like that to develop, where you drop and break hard and maybe bounce off a 290 and finish back above these lows. That would give you a bullish failed new low, and that would open up a significant move to new highs, or at least through these recent highs here up for another wave up. So that's going to be the bullish thing to watch out for. But shy of that, just keep an eye on it here to see how it responds to the edges. The edges will tell us. The big time bearish outcome would be if it tries to break out but fails. And if it tries to break out here and fails, that'll be a failed new high in a down move, which could easily go outside day down pretty quickly. That could end up being a bearish outside day, and could open up again more weakness back down. So some thoughts on Meta, but it's got a nice narrow 4-day range. The amount of points in that range is 8.3. It's been averaging about 19. Because it's compression that's going to potential expansion, we might even get a little bit more than that, as high as 24. So we'll keep an eye on this one for the next big move here, but it could be coming up here fairly soon. Looking at ROKU. Oh yes, we'll get the square as well. Thank you for that suggestion. Looking at ROKU here, man, what a great one as well. Again, another one that's worked great off of our key ranges. That's our key range low. That's our key range high, which we're on top of right now. And this is our key range midpoint. Earlier, this summer we had this rounded bottom at the lows, and on the first trading day of June we did our monthly market outlook, and on that day I mentioned this is our bullish candidate. We're looking for price to squeeze through 60 and rotate back to the top of this range and maybe go grab the edge. And it did a great job. It then gave us that sell signal and we looked for a rotation back to the middle, and we got that too. And this thing has shown quite a bit of volatility ever since. We did get full on expansion here at the edge and nearly got the 100% target. Fell just shy, 99.80, and this thing got to like 98.40. So that's about as close as it gets without getting there, you know. Very good move. But again, as we've talked about before, on that day right here when we marked the key range, we knew that ultimately 100 could be the target for the year. It got to 98.44. I mean, that's pretty solid. Really close. Now, what's coming up now? I mean, you have this key range high here. You have the midpoint, and the lows way down here. And right now, we are forming another rounded bottom type of pattern, very similar to this one here, off of the top of the key range. Failed new low Friday, a little bit of a strong push higher here today. I mentioned this morning that if we fail through 80, this could open up a failure at the edge, and we could actually rotate back down within the range. We could be looking at a return back towards 65 and the value measurements below. The value measurements between 62 and 66. You got the 200-day moving average, year-to-date VWAP, and VPOC on a 5-year basis. That zone right there looks like a very good come to value type of situation. And I would say that for those of you who are looking at this maybe from a bearish perspective, how do we open the day tomorrow? If we open with a gap down, it could be a bearish MGR, and that could be a great trap in reverse. So just some thoughts here on this one. Not saying it can't rally here. It's shown a propensity to really push higher in big waves. It actually has a huge expanding envelope of volatility here, and on this next move, I mean it could finally make a move for that 100 proper here. It's just if the market's starting to peter out a little bit, this would be one last trap before maybe dropping back to value. So keeping an eye on 80. If there's a failure through 80, it could ultimately open up 65 down below. Amgen already started to break before the end of the day. This morning it had stayed above the previous session's lows, hanging out up here for a little while, but above the previous week's lows. Now this one is a rotation candidate back toward 240. 239 is year-to-date VWAP. Right here, this is 255. 255 been a big key level here. You can see all of the various inflection points, and then here recently forming this little range right on top of it. So this morning, prior to the RTH Open, I mentioned that this is going to be one to watch. If we fail at 255 today, it could open up a continuation down as low as 240, 239, right in that zone. Additionally, with this 10-day narrow range, we have enough energy to get us to that zone. So again, quantifying compression of range helps to give us a good idea of how far the market may go. Down here, very compressed. This thing goes about 15 points on a 10-day basis. So if you look right here, that's about 15 to 17 points. So a failure at 255, and we're looking at 15 points down to 240. So there's enough juice there to do it. On this break here today, you want the next pullback to be sold for a continuation of new lows. You don't want price popping back above 255 and closing back above it. If so, this is going to be a trap, and you're getting another bounce within this compression. So failing at 255, you need to stay below it on a closing basis, but looking for any pullback to be sold for a continuation that could ultimately take us into this empty part of the profile. A couple of last charts here. We'll jump on Square as well, and any last symbols that you all want to look at. This is AI. AI been big buzzword this year. Huge movement. Obviously, we saw some of that movement earlier this year here with some of the members mentioning the wide moves we're seeing, especially in this stock. This trap and box below was fantastic. We had that on the radar, and a good move across the range. So even a nice new stock, you like to see some good market structure concepts and things play out the way we like to see them. And we look like we're building another one of those now, which is this range right here, right? And then you get a box below, and then as soon as you fail to hold below the box and you transition, you go to the top right there. And we're doing it again. We're doing it again. If you look over here, it's happening again, and we've got a little bit of an action that's happening down here. If price can kind of push back above 32s, there's a move back toward 42 that could be ahead. Very similar to what we just seen back here. So this is going to be one to watch for a potential squeeze. Now, anytime you have stocks that are exhibiting quite a bit of volatility, they're the in stocks, whether it's a meme stock like GameStop or AMC, or whether it's something going to the moon like Nvidia. You have to respect the volatility of that stock. You have to respect how you approach it and the risk you're willing to take on some of these moves, especially around earnings and things of that nature. So when we discuss stocks like this that are very volatile right now, stocks going from 18 to 50 very quickly and then back down, and etc., you just know you have to do this in a way that you're mindful of your risk, and again, you know exactly where your break point is in case things fail. In this case, that's why I like to use pivots the way we do, midpoints the way we do, all the various market structure concepts, because it's if then else. We're looking at this level right here. We're looking at these lows, and those lows are 32. And if price can push through 32 in a transition way, and if price can hold that retest, then we have high odds of rotating back up within the range. We have a level to watch and engage off of. And now when you couple that with additional rejections and setups that we like, things can really come to life. We do have earnings coming up here. Failed new low, 4-day narrow range, upward bias, lower low failure. All of this here could be a surprise squeeze. Now, earnings for a stock like this can be iffy because, again, a lot of strength and movement off of, not real earnings yet, right? And so you can see everything's negative here, and that's where earnings can sometimes throw a wrench into things right away. But this is going to be something to watch. Earnings here is going to be the 6th, which is tomorrow, and it is after the market closes. Again, whether this thing can push through 32 or not right now could be a big indication of where the next move occurs, because if it can push through 32, you have 44 above. If you fail at 32, then you're probably taking this range and rolling it back down. 20 could be the next level in that case. So big time potential here. That gap could be a big deal. I will say, if it gaps down because of, say, earnings, whatever, just because this stock kind of being an in stock a little bit engagement wise, that gap down could be something where a fill happens a little bit faster than not. It happened last time. Look right here. This is where we were. It gaps down on earnings and it fills most of the day, and several days later it had already filled and hit a new high. You know what I mean? So something like that could be in play. Let's take a look at Square. Square is a good one here that's hanging out near a key range low. I'm struggling with this one at the moment compared to last time. This is your key range here. It's a large one. It's a large one. 56.5 up to 80, or 78 rather. 56.5 to 78. Last time we had the rejection here at the key range low. Back to the middle. Middle honored, middle transition, up to the high. Higher high failure, fails at the high, back to the mid, back to the low. Key range for the win. I'm telling you, key ranges are tremendous to use for identifying those major inflection points in the chart. We're here now. How's it going to respond now? Narrow range, transition back up, 56.50. Can we get a higher low? Can we get a good secondary rejection here? If so, we could be looking at a return back to value and the middle of the range, which is going to be 67.25. Those are two value metrics as well. You have year-to-date VWAP, 200-day moving average. So you're in the lower part of the profile here with a shot to squeeze. And that's just to the middle and value. And then there's a shot to do it overboard up to the top and then maybe do it again. Who knows? D-shaped profile, that's what you do. This is where I have a little bit of trouble. And that's just me. It's that we haven't hit this low just yet. It's just right there. Do we need to go get that? It's already made this huge move up and then all the way to take out those lows. Do we just need a little bit more to get that low? So I feel like at some point this year we might grab that low and it's a better entry. But even off of this key range right now, it's still proving itself. And that's all you ever want. You want it to prove itself against the idea that you're working off of. And the idea in this case is the fact that it pushed back above this 56.5 the way it did means that all it has to do is continue to hold above that 56.5, and now it's working higher off of this level up toward that next pivot above, which is this level, and that's 67.25. It's also the previous month's midpoint and all these other points. So a whole bunch of magnets up above to go get. But we'll see if we can get that good secondary rejection there. That's square. But looking really good. Nice narrow range. That narrow range could open up some expansion as well. So you know it looks good. You know, if you look at the weekly time frame, you see the longer term range here. You know, that's the range. So that's why, as you see, here's last year's low right there. We've never quite gotten there. We've gotten so close. Still very heavy selling every time it bounces. So maybe it gets there. So this is still a good long-term idea at 50 to see if it can bounce. And remember, I don't even know if it's doing anything up here. I don't know if we come back to anything over there. Just to trade this range alone is enough by itself. To go 50 to 90, that's a huge percentage gain. That's all you need right there. Now, if it can transition through 90 right here, now you're opening everything up to here, and that's where you could be pointing at about 155 to 160. Now, that's where things get real. Because if you can buy 50 here and be patient, maybe 150 is down the road next year. That's what we've talked about in our room before. We're in this lower market structure right now, but when do we transition here and go get the top of this range? And if you have an eye at that side of the range as a target, then your eye should be down here as an entry. Down here, failure here, trap and reverse, and maybe a long-term target up to 150 down the road. The last one we're going to look at here is Tesla. You all have been awesome throughout the day, multiple times. I know multiple room sessions here today. This is the fourth one of the day, which is a very busy time for us. It's usually at least 2, sometimes 3, but 4 today. So thank you all for being patient and having a thirst for the content. Very, very much appreciated. Always awesome to host you for the monthly outlook and everything else we do, including the premium boot camps and the daily rooms. One of the things that we talk about oftentimes in our room is the key market structure levels that reveal themselves in these markets. For Tesla, it's every 60 points, 220 to 280, 280 to 340, 340 to 400, down here 220 to 160, and 160 to 100. Those are 60-point increments. Beautiful, right? And we've seen them play out here. We've seen it transition back above and to the top. Right here, we mentioned this could be a perfect buy for a move to 280. and it goes up here, because if this is going to be a hold, not only can it go to the top, but it might be the time before it pushes to the next one. We mentioned the same thing when it hit 220. Actually, before it hit 220, on this high, mentioned that on this pullback, if it hits 220, it could be a perfect entry to 280 and a move to 340, just like it was here and just like it was here. If this is the bottom of market structure, it goes back to the top, and then it pushes through and it goes to the next top. It did it here, up to here. It's doing it now from here and working its way up. Now, the way it turned around in the daily chart here was like an island reversal, abandoned baby style. I mean, it was very stealth. It closed below there. It traded below one whole day below 220, and the next day gaps up and runs. That's a trap. That's a great trap. And so when you're looking at Tesla here with the uptrend and the upward motion here, we're at 256 right now. I still think 340 is up ahead for Tesla. And the way that it's bounced off of 220 here, you know, you'd like to see some great follow-up reaction or higher low, and that could work its way up to this level here. At the very least, from 220, we're working up to 280. Once it can push through 280, it opens up 340 up ahead. Some long-term ideas there for Tesla from the longer-term perspective. Channeling higher, 60-point increments, bouncing off the 220, opens up 280 and 340 up ahead. And lo and behold, if we do get up here to 340, we may pull back to 280, and we may bounce off of 280, hit 340 and 400, and hit the previous year's high. That might be the blueprint here heading into the end of the year and the rest, perhaps even into Q1 of next year. So that could be a lot what this thing does, you know, in terms of the flow. So keeping an eye on Tesla. Very strong. Again, hard to really sell this one for any length of time, but this was a great move down to a great inflection point, and then it reacted just as we thought it would weeks earlier. So very, very nice reaction with more potential upside above. All right, everyone, I am going to go ahead and call it a monthly outlook for September 2023. An hour and 20 plus minutes of pure chart awesome. Thank you very much for joining me here. Thank you for being with me throughout the day. It's been a long day here today, a lot of sessions, been a lot of fun. We'll get all the recordings up and running. Day 2 of our boot camp is tomorrow. Again, if you haven't found yourself into our trading room and into the boot camp series, come up here to pivotboss.com/events. Click on free trading room access. Get started here with the coupon. And then here is our schedule for the rest of the week. Tomorrow, 11 every day. Let's get going. Extreme reversal on deck for tomorrow. Everyone have a fantastic rest of your day, and we'll be back at it again in the morning. Take care, and I'll see you soon.